Ethereum, Bitcoin, and crypto could be in major trouble here. Let me just show you this one scary chart, and it's bound to scare the bejesus out of everyone. Look, and this makes a lot of sense if you look at it. What do you think? This is strategy, micro strategy, right? Look where they are right now. This is a very simple 52-week or 1 year moving average. And it's basically breaking down here and breaking down here. This only happens once a cycle, right? When it breaks out, we have the bull cycle, and when it breaks down, we have the bear cycle. Where did it break down? Look at this. This breakdown happened November 29th. Wow, pretty much, I wouldn't say timed exactly, but as an indicator goes, right, that's about as accurate as you're going to get. That's when Bitcoin was at 50K, right? You would have exited here. And this gave the signal here around 15th of September, which is like 4.5 weeks ago, when Bitcoin was at, what was Bitcoin at? Here, Bitcoin was at, wow, 124K that day. What a signal. So basically, sometimes we just apply a random, not a random, but 52-week moving average with Bitcoin itself. And we can see that sometimes it chops when it's in a range. But when it starts moving in a bull market, basically it's very well defined. Here's the entry, here's the exit. Here was the entry. There was a bit of a back and forth, and then it rolled that average all this time, and then the breakdown here. So what do we think about this? This is obviously a major signal. If you believe in this, then you would say the bull market is all over. The bull market is all over, man. What are we going to do here, right? That's a pretty major signal. What are the arguments against this? I know people are screaming right now, Pablo, you got to make the arguments against this. Tell us the bull market is still alive, man. And here's my argument. You ready? So basically, I would say from a statistical point of view, this is a very, very small sample size. You basically have this one sample. I understand how important MicroStrategy is to Bitcoin. It's like the buyer for Bitcoin, right? What is it, like number 2, number 3? It's used to be number 2, largest holder of Bitcoin of all time, behind the Satoshi Nakamoto wallet of 1 million Bitcoin, right? Which he's never going to spend, apparently. So it happened once, will happen a second time. The thing is, from a statistical point of view, it's very small sample size. And as we can see, moving averages do chop around. Even, right, they give lots of false signals. Even on MicroStrategy itself. Overall, the argument against moving averages is kind of strong as well, because if you apply to these 52-week moving averages on other stocks and use a trading bot strategy on that, it doesn't work, right? At least after commissions and taxes, it doesn't work, because it's not a very reliable signal. And especially here, you only have one data in the sample size. So what I'm saying is, for people who don't understand the statistics, it happened once, right? We don't know if that's a reliable signal or not. So here's the thing. The other thing is, look at what I just said. I said that it used to be MicroStrategy used to be the number 2 wallet in crypto. Now it's the number 3 wallet. Who's number 2 right now? Number 1 is Satoshi Nakamoto with 1 million Bitcoins purchased. Number 2 right now with 570,000 Bitcoins purchased in their wallets is BlackRock. So the reason why MicroStrategy was so influential in this cycle, the last cycle, 2021 November Bitcoin top, was because they were the main driving force of Bitcoin. Now, in this season, you have a lot more driving forces. You have basically BlackRock, you have Fidelity, you have all these Wall Street ETFs, and then on top of MicroStrategy, you have all these other copycats of MicroStrategy, such as Metaplanet, all these what they call DAT stocks, digital assets, treasuries, DAT stocks, right? So where is Bitcoin really headed from here? Before we answer that question, first let's answer the question of which crypto exchange does Pablo use? Well, Pablo uses this exchange that's non-KYC. So that means you don't need to show any ID. That means even the exchange can't see who you are. So that means the RIS can't see you, the tax office can't see you, FBI, CIA, nobody can see you, right? Total privacy. And that's why I made this exclusive deal with them only on the Pablo link. Win up to $6,000 plus 2 ETH, right? Whatever ETH might be worth by the end of this trading period. Get 20% USDT bonus just by depositing and doing a little bit of live trading. Deposit $100, get $20, right? By trading 4K in volume. Deposit $500, get $100 by trading 20K in volume, right? $1,200 here. You get the idea. Limited time only, folks. This deal finishes on 4th of November, midnight. 4th of November, midnight. Okay, now let's get back to the markets. Oh, by the way, if you're watching this on YouTube, then the link is in the description below. The link is in the description below. But if you're watching on any other platform, such as this one, that's okay. Just click on the my profile page, and there's my Stan link or link tree. We click on that, and it should be the first deal that pops up because this is a great deal. Okay, let's get back to the markets, folks. But remember, this deal is exclusive only on the Pablo link, only on the Pablo link. So I think that kind of is my rationale for what's happening in the MicroStrategy. With MicroStrategy, people have been talking about that a lot. But another thing to watch out for is there are other signals which we should be careful about. For example, this is the monthly close we just had. Okay, what do we think of this monthly close? You know what? If it closed around here, 113, right, instead of 109.5, I would have been like, this is a doji, right? In Japanese candle charts, these candle charts are actually invented by the Japanese rice traders. That's called a doji. And here, it means the market is undecided. So you got 50% chance going up, 50% going down. But here it's not quite a doji because you got this body of the candle slightly down here. So then you would think it's something like this. One more test, 105, 104K area, and then boom, bounce upwards to make a new all-time high. That's kind of the scenario I'm thinking. Why is that? Well, that's because I've been saying for a long time, ever since we had this crash on 11th of October, that basically 3-4 weeks ago, that we're inside a chopping pattern like this. I call it a pinball machine. I said we're going to get wild swings within this range, right? And then we swing up, right? And this is the pattern, fractal. I copy and pasted from August 2024, August 5th, 2024, when the Japanese yen carry trade crashed, right? So far, I mean, it's kind of a rough guide of how this thing is playing out. See the dip here, 3 days ago to 106, 4 days ago to 106K. We're now at, this was indicating a tap 105K. So far, it's playing out. And there's another version of this that was slightly more pessimistic, but I'll show this version as well. It eventually leads to a new higher high anyway, right? To the 130s. And this version was using the copy and paste or fractal of the May 2021 crash. May 2021 crash, and it basically indicates, as we can see, all these chops, bounces up to as high as 118K, and then down to 100K, and then boom, and up we go. So it's kind of like these give you a rough understanding of the kind of situation we're in. And people might be asking, oh, Pablo, can what do I do if I'm trading futures? What is my strategy here? You can't tell me exactly where it's going to turn. You say roughly 100K, 123K. What? That's too wide. What I'm saying here is simply this. Then in that case, if we know this is the situation, we're going to be in with a bounce up later, right? Then shouldn't we just trade the market as if it's in a range? What do you do as a futures trader if you trade the market in a range? Well, if you're a futures trader, then that basically means you sell the resistance and buy the support, right? Sell the resistance and buy the support, right? So we can see here was this rising trend line. We've broke it convincingly. So we sell the resistance, we buy the support here. We sell the resistance, right? We buy the support here. We're basically inside a range, right? And the range could be as low as here, like 103, 104K here, right? It's basically just means we're not in it's a very different trading strategy from when we're inside this sort of what they call range expansion, right? If we're expecting a big move like this or like this, basically we set the stops a little bit wider and we enjoy the ride all the way up here, and then we try to take profits somewhere along here, right? Same strategy here. We're expecting a trending move upwards. Whereas here, I've already told you guys we're expecting sideways range, which means higher frequency trading, tighter stops, right? Take a short or stop loss or stop profit, stop out when we hit resistance, and go long when we hit bottom support, right? We're basically inside a range until about late November, early August. Mid-November and early first week of December. I've already said that a number of times. I showed you guys how I arrived at that. Okay, let's have a look at where the overall market direction is going. So here, for example, is the short-term holders realized profit and loss. So short-term holders, of course, as we know, are the short-term speculators, and they tend to lose out to the long-term holders, right? They tend to. So they tend to not make the best decisions, and their realized profit and loss shows when they panic or when they FOMO. And usually it's a pretty good indicator. Like, look at this. When Bitcoin was like below 20K, below, like here is 15K when it was a buy, they were constantly selling at a loss, right? And then when Bitcoin popped up, they were buying, right? They were buying. And that's not bad historically, but remember, they were selling here and buying here. And then when Bitcoin took a slight dump to 25K, they sold heavily here. They sold even harder than they were selling at 15K when this was the dip to buy. Right? And then Bitcoin rises up. This was when Bitcoin ETF got listed, right? On basically the NASDAQ, BlackRock ETF got listed, and they were buying the top. Right? Realized profit. I mean, well, that means they did do some selling here, but you can see these spikes tend to tell the tops, right? Realized loss, that means they all sold at, a lot of them sold at a loss here. This was the August 2024 bottom when the Japanese yen carrier trade got reversed, and I was talking about that just about 5 minutes ago. And we can see they sold at the exact wrong time as well. That's why I've used a fractal, or copy and pasted this into the current situation we're in right now. I mean, I just literally explained that situation 5 minutes ago in the video. Okay, so here, the spike up here, right, kind of showed us we're near the top. When they sold in panic here, showed us the bottom. And we had 3 spikes here. This one was kind of okay, like 118K top. This one 123K top. This one nailed the 126K top. But now we're getting into this right panic zone again. So this kind of backs up what I was saying before. I was expecting kind of one more move down, 105, 106K, 104K in an extreme situation, and then boom, up we go. So one more panic from the short-term holders, and they sell at a loss. And then basically, like, this is showing we are in one of those panic bottoms. Not quite as deep as this one. Certainly not quite as deep as this one. But, and not as deep as this one. But it's already as deep as Bitcoin at 15K. It's already saying, look, when Bitcoin was at 15K, short-term holders were selling at this kind of loss. And so I do think we get a couple of more. Look, each time it doesn't just come down once. There's like 1, 2, 3 signals, 1, 2, 3, 4, 5 signals, 1, 2, 3, 4 signals. We've had 1 and 2 signals. So that's why I do think we have one, maximum 2 more dips down, right? Below 107-ish K. So 106, 105, 104K-ish area, and then boom, up we go. That's the signal I'm getting here. Also, but why am I leaning towards being bullish? Overall, I've seen some folks post some very negative and very bearish calls because they like that MicroStrategy chart I showed you guys at the start. Why am I not bearish for the next few months? It's because, as I've been emphasizing over my last a number of videos, that I think QE is coming, quantitative easing, or what they call money printing. Look what happens when quantitative easing arrives. This is the blue part, right? Boom, right? Of course, this was unlimited QE. This was March 13th, March 14th, 2020, COVID, right? When the Fed said unlimited QE. But the markets are trying to be, some people are trying to freak you out. Some people are getting the wrong conclusion. And they say, look, this is when QT happened, right? QT was basically caused, during the last phase of QT, Bitcoin actually pumped in 2017. And then Bitcoin settled down during QT, and it was dump and a mega dump, right? And then they said QT ended, but Bitcoin dumped again and it caused a crash. Okay, let me just explain. This crash, and they said rate cuts don't help either. Let me just explain this. This crash was due to COVID. If COVID didn't happen, do you think we would have had this crash, right? I would say not. I think it's pretty reasonable to say we wouldn't have this crash. And so in this period, QT ended, there was no QE, and we had 3 rate cuts, and Bitcoin price went down, trended down slightly, and then went down and then popped up. But that's because QE didn't start. But as soon as QE started, prices took off. And right now, my thesis has been for the last few days that QE is about to start because the US banking system is in a major crisis. I'll say it again. The US banking system is in a major liquidity crisis. And I seem to be the only one calling this because everyone else is getting it wrong. Everyone else is saying, look at this, saying, oh, treasuries are 29.4 billion. The Federal Reserve bought banks bought 29.4 billion of US treasuries bills and bonds from the banks as a standing repo. That means they pumped $29.4 billion into the system. I said, no, it's much worse than that. It's 20.95 billion mortgage-backed securities as well. So all up, it's more like 50 billion. It's more like $50 billion. And that's a huge number, right? It's way worse than what you think. I'll show you why. See, look, this is where we're at now, and we think, oh, gee, that's terrible, right? Gee, that's terrible. And look at this. This is the period during 2019. Started in September 2019, and then ended on March 12th. The peak was March 12th, 2020. Of course, that's when the Fed came out and said unlimited money printing. How much did we have do that day? That was 184 billion in treasuries and 91 billion in mortgage-backed securities. So all up, that's 276 billion dollars. $276 billion in one day that the U.S. banks were asking from the Fed during COVID, right? But on an average day, how much was it? It was like the high was somewhere like here. A bad day was something like here. 85 plus 18, $103 billion. A good day was something like here. 28 billion plus 28 billion, which is like $57 billion, right? So in other words, it was like between 50 billion to $100 billion, right? We saw that between here, 55 billion to about $105 billion. We're already at $50 billion on Friday. So, and the Fed knows because they didn't act quick enough. It caused a crash. Even without COVID, the market was bad. The US banking system was running out of liquidity. So that's why I think QE or the printer is coming, right? Follow Pablo for more updates.